Tomorrow is going to be one of the busiest days of the year so far. First, we have PMI numbers for France, Germany, the US, and the UK. We also have Canadian inflation numbers and retail sales numbers releasing tomorrow morning. Canadian CPI is forecasted to drop just slightly down to 6.5%. Not only that, but tomorrow night, the Reserve Bank of New Zealand will release their new monetary policy statement. On Wednesday at 2 p.m. Eastern Time, the FOMC meeting minutes report will come out, and on Thursday we have U.S. preliminary GDP numbers forecasted to come out at 2.9%. I want to remind you that all week you can watch us cover these news events during our live stream each morning right here on the A1 Trading YouTube channel. All right, everybody, let's check out what the Edge Finder has for us today. Let's start off in the market heat map. Let's see how our assets are trending so far today. So up here towards the top, I see USD ZAR, Aussie US, Aussie CHF, Aussie CAD, Aussie NZD, and the US 30. Those are our biggest movers to the upside so far today, according to the market heat map. And USD ZAR is the biggest mover out of all of them, up 0.52% on the day. Let's take a look at our movers to the downside. Down here we have the NASDAQ 100, GBP AUD, Euro AUD, the S&P 500, Euro CAD, and GBP CAD. So NASDAQ 100, our biggest mover to the downside out of all of our assets, down 0.58%. The S&P 500 is also down 0.28%. But the US 30, on the other hand, up 0.39%. So overall, doesn't seem like a great day for US indices. However, US 30 has made some moves to the upside. Let's check on gold as well, just for fun. XAU USD, here it is right here. Gold up 0.24% on the day. Let's head into the watch list and check out our buy and sell biases. I'm going to remove the neutral biases. These are all of our buys and sells currently listed in the Edge Finder. We have a fair amount of them, but I'm going to remove any indices that we might have. Commodities as well, but we don't have any commodities listed as buys or sells at the moment. And that leaves us with just 5 buys right here. 2 of them strong buys, however, USD CAD and USD ZAR.
Are you brand new to trading? Do you have a strategy that's not going so well and maybe you think you need some help, or maybe you just don't even know where to start? Well, lucky for you, A1 Trading has a trading help desk. All you have to do is fill out this form. At the bottom of the form is a list of things that you might need some help with. After you select that, we'll send you an email with a playlist of free videos from our YouTube channels, some tips on where you might want to begin, and even examples from our in-house traders and what they do in these situations. We'll even give you a peek at some trading tools that we provide that could help. Use the link in the description, the A1 Trading Help Desk. Click that link and get started now.
A strong list of strong sells. We have 5 of them right here: GBP CHF, Euro USD, NZD USD, Aussie USD, and GBP USD. So US dollar pairs, US dollar crosses are making a lot of moves in the markets, a lot of volatility. I mean, we have all of these strong sells here for US dollar pairs. We also have USD JPY with a normal buy signal, and USD CAD and USD ZAR with strong buy biases here. So US dollar pairs on both sides, buys and sells. So now we just have to pick which pair we want to take a look at today. GBP USD has our strongest score out of all of our assets with a score of -9. USD CAD is our strongest buy with a score of +8. And I think that we can take a look at USD CAD ahead of tomorrow's CPI event. So tomorrow we do have Canadian CPI numbers, that's inflation numbers coming out. Currently at, let's see, I believe 6.3% in Canada. So we will see how that rate comes out tomorrow. We also have retail sales numbers in Canada. But yeah, let's go ahead and break this down. Strong buy bias, score of +8. COT data is a score of +2, and retail sentiment a score of +1. We can get into those numbers right over here. So COT data, or institutional trader data, currently favors the dollar long, 64.74% long and 35.26% short here for the US dollar. On the other hand, 68.58% short and 31.42% long on the Canadian dollar. So institutional traders or smart money traders, however you refer to them, favored long on the US dollar, favored short on the Canadian dollar. Retail sentiment over here, retail traders currently 68% short, 32% long on USD CAD as a whole. So retail traders shorting this pair at the moment. Our seasonality is a score of +1. We can see here in the month of February, historically speaking, when we're taking a look at this over the last 10 years. So of course, historically speaking, this pair looks a little bit bullish in the month of February. Our trend reading is a score of +2, and look at that strong upward move that we made over the past couple of days. It's remained a little flat, came down just a little bit over the last 3 days or so after making that really strong upward move. And of course, these Canadians CPI numbers tomorrow will certainly have an effect on this pair, so this is something to keep an eye out for, but price forecast does predict that this pair will continue to trend upwards. Let's finish out with our fundamentals here. GDP growth, unemployment, and interest rates, all scores of +1. Inflation is a score of -1 here. So US GDP growth currently 2.9% compared to 0.7% in Canada. Inflation for the US 6.4% compared to 6.3 for the time being here in Canada. Unemployment 3.4% for the US, 5% in Canada. And lastly, interest rates 4.75% interest rates on the US dollar, only 4.5% on the Canadian dollar. So there we go. Again, this is one to potentially keep your eye out for, especially going into those Canadian CPI numbers tomorrow. If you want to watch us cover that news event live, you can do so starting at 8:15 a.m. Eastern time tomorrow. Those Canadian CPI numbers will come out at 8:30 a.m. Eastern time tomorrow, but we will be live before that, watching the markets, watching the spike live. So please feel free to join us for that if you are interested. I'll also let you know that we have a link to our free version of the Edge Finder down in the description below. It is a free version of it. It is a limited version of the Edge Finder that you can have for life. If you want access to that, you can get it down in the link in the description below.
Something I just wanted to point out was, so during this time period when we had this big crash in the S&P, it was 1-1 with the dollar. So the dollar did the same things during this time.
Yeah.
So they usually act as inverse like assets. So if one goes up, the other goes down. And so you can trade on those things. But when there's talks of recession and fears of it and just worries that things are going to like go bad, they both decline. They both move in unison. And so what we've seen last week and this week is sort of a connection. They've kind of done the same thing. And I know there's sometimes going to be correlated and sometimes not, but we're seeing a lot of like similar activity now. And it just seems like the uncertainty is heightened. And that's usually what happens right before something pops. So I was looking at these two graphs, how the dollar and S&P are moving in unison right now. And also one thing that moved the exact opposite way, Euro CAD, which was insane, but it moved to the upside. So just
I remember those moves.
Things to watch during this time, I feel like, would be these assets, because when they move, they really move. And so if you're trying to trade them, it's going to be hard to pick a direction right now. So just some patterns I've noticed, like in previous like moves, and the last recession was the same way. So I just thought maybe this would be helpful to share.
Yeah, no, that's totally helpful. And one thing you pointed out there, Frank, is like, look at the absolute one directional move that
several of those assets you just pulled up showed. Like in the case of a crash, a lot of people are scared of a crash. And of course, there's good reason to be. That's terrifying when it happens. But at the same time, if you're trading that market and you catch that short, whether it be, doesn't necessarily even need to be on the S&P 500. You could be trading the dollar. You could be trading that Euro CAD move. If you catch something like that, that's a big example of why, during that time, we really started upping our exposure to sort of trailing stops because of those, occasional crazy moves that can occur. So, and a good point to say, especially with that dollar and S&P 500 correlation that we've been talking about so much recently, it is worth noting that, sometimes you see that occur before sort of chaos in the markets again. So a good point.
Yeah.
There, sure.
This is just showing, this is the correlation coefficient.
Yep.
So right now it's not 1-to-1, but it's like 50%, which is still a bit unusual.
Yeah,
So
because you
if
do
this,
see a lot of that, the weight of that correlation coefficient tends to be on the bottom, where you usually see dollar
right,
down, S&P 500 up, that sort of thing. So a weird scenario, especially in which case, one has to give if it's going to go back to sort of the historical trend there, where one rises and the other falls. And again, always love to see correlation coefficients. They're a powerful indicator. So
yeah,
thank you for sharing that, Frank. And Frank, thanks again for coming on the stream.
yeah, thank you.
Make sure you guys check out the links in the description if you need broker recommendations, access to our free Discord, or want to chat with us on Telegram. If you're interested in our trading software, the Edge Finder, you can find that in the description as well. Thanks for watching.